Understanding the profit and loss statement, a small business owner's guide. Now, does reading your profit and loss statement feel like you're decoding some secret message? Maybe looking at a printout with hella lines of numbers is like trying to understand Pig Latin. Or maybe you're not even sure of what this tells you. Don't worry, I got you covered. Today, we're gonna break down the profit loss statement so it makes perfect sense. No finance degree required. So let's talk about and demystify your profit loss statement. Your profit loss statement, also known as an income statement, is one of the most important financial documents for your small business. It tells you the story of your business's financial health. Now, whether you're profitable or headed for trouble. Now, in this video, I'm gonna walk you through what a P&L statement is, why it matters, and how to use it to make smarter decisions for your business. Hey friend, my name is Eric Neum, your go-to guide for all things small business finance. Now, I've been working for the past 13 years as an advisor and an accountant for small business owners around the country, and I've seen it all. Now, whether you're new to business or looking to sharpen your financial skills, understanding your profit and loss statement is the key to making informed decisions. Today, we're gonna break down your P&L into easy to understand pieces with real-world examples from companies like Tesla and Nike to make it all click. So let's dive into the profit and loss statement step by step. First of all, revenue. This is also considered to be sales or gross income. This is the total amount of money your business earns before any expenses are deducted. Think of it as your top line on your P&L statement. For example, in 2023, Tesla reported revenues of over $81 billion, which was a 50% increase from the previous year. Pretty impressive, right? Now, some accountants also call this gross revenue or top line, meaning all revenue before expenses. Next is the cost of goods sold, or COGS. This represents the direct cost of producing your goods or services like direct materials and labor. Now, subtracting COGS from revenue gives you your gross profit. For example, if you run a coffee shop, your COGS will include the cost of coffee beans, cups, and barista wages. Keeping your COGS in check is crucial to maintaining healthy margins. You want to make sure that you're tracking this properly to help you determine your true gross margins on the products or services that you sell. Are you charging enough money for what you offer? Now, gross profit is what you get after deducting COGS from revenue. It's a key indicator of how efficiently you're producing your products or services. Now, for example, Nike, known for its effective supply chain, consistently maintains a gross profit margin above 40%, allowing them to invest heavily into marketing and innovation. Now, looking at this number regularly will help you determine if you're charging the right amount for your service or product that you sell, and if you are keeping your cost of goods sold under control. Now, operating expenses, or OPEX, includes everything else it takes to run your business: rent, utilities, salaries, marketing, you name it. Unlike COGS, these are fixed or variable costs that aren't directly tied to production. Now, lowering your operating expenses can help you boost your net profit. For example, during the pandemic, many companies like Zoom kept costs low by reducing their in-house office expenses and increased their profitability. One of the biggest expenses most business owners have is in payroll and in labor. Now, keep an eye on those expenses on a monthly basis to ensure nothing is going to waste. Now, finally, we arrive at net profit, and this is what is known as your bottom line. This is what's left after all of your expenses, both COGS and operating expenses, are subtracted from revenue. Now, if your net profit is positive, congrats, you are in the black. If not, it is time to analyze where costs can be reduced. Even Amazon, the e-commerce giant, operated at a loss for years while building market share, but eventually their strategy paid off with substantial profits. That said, just because you have a number on net profit does not mean that you have that as available cash in your bank account to go spend. So don't go spending what you perceive to be your net profits. Now, analyzing your P&L isn't just about seeing if you're profitable. It's also seeing where can you improve. Are your operating expenses too high? Is your gross profit margin shrinking over time? Use your profit and loss to help you make data-driven decisions. Now remember, treat this as your financial scorecard, so let it work for you. Personally, I recommend all my clients look at their profit and loss statements monthly, as it's going to allow you to be able to make the appropriate changes to your business as you need them. So there you have it, a crash course in understanding your profit and loss statement. Looking at your business profit and loss does not need to be complicated or stressful. You just need to keep an eye on a few key numbers like gross margin, payroll costs, and net profits to have a good pulse on where you stand with your business. Now, if you found this breakdown to be helpful, be sure to hit that like button, subscribe to the channel for more small business tips, and share this video with fellow entrepreneurs. And if you have any burning questions, drop them down in the comments. I am here to help. Remember, mastering your P&L statement is more than just numbers. It's about knowing your business inside and out. Well, thanks for watching, and until next time, keep growing your business one smart decision at a time.